Right now, Ventyx Biosciences Inc., trading under the ticker VTYX, is sitting at 13.76 USD per share, which is a massive jump of 3.71 or roughly 36.92% today. If you have been watching the tape, you know that kind of movement in a single session is not just noise. It is a signal that something fundamental has shifted in how the street views this business. While most of the retail crowd has been busy tracking the daily swings of Tesla stock or checking their Apple stock positions, a high-stakes game is unfolding here that could redefine this specific corner of the biotech market. The immediate insight that most people are missing today is that this surge is not just a random technical bounce from a beaten-down chart. We are looking at a situation where the market is suddenly pricing in a much higher probability of a total buyout. Reports are circulating about advanced negotiations with Eli Lilly for an acquisition valued at over $1 billion. This changes everything because it moves the story from a speculative clinical play to a concrete arbitrage and valuation play. When we talk about expectation versus reality, the gap here is wide enough to drive a truck through. The general expectation for Ventyx over the last few months was one of cautious survival. After some setbacks in their earlier trials, many investors had written them off as a small-cap biotech that would slowly burn through its cash until it either hit a home run or faded away. The reality, however, is that their work on NLRP3 inhibitors has caught the eye of the biggest players in the pharmaceutical space. If you were using something like Schwab Intelligent Portfolios or a similar tool for your online investment strategy, you might have seen VTYX pop up on volatility scanners. But the story goes much deeper than just a price spike. Big Pharma is currently desperate for oral alternatives to injectable drugs, especially in the red-hot obesity and inflammation markets. Ventyx happens to be sitting on exactly what they need. The trading volume we are seeing today is off the charts. We are talking about millions of shares changing hands in a matter of hours, far surpassing the 3-month average. This suggests that institutional players are not just watching from the sidelines, they are actively repositioning. When you see this level of commitment, it usually means the smart money believes the acquisition talk has real legs. Unlike the typical retail-driven hype you might see on social media for something like Nvidia stock, this movement feels calculated and heavy. It's the kind of activity that makes you stop and look at your individual brokerage account and wonder if you are missing a generational shift in the biotech sector. Whether you are using Fidelity or you prefer the interface of the Robinhood app, seeing a 37% green day on your screen is a prompt to look at the underlying mechanics of the deal. Let's break down why this is happening right now. The market narrative for Ventyx has been heavily focused on their VTX3232 candidate. This is an oral drug designed to penetrate the central nervous system to treat conditions like Parkinson's and potentially obesity-related inflammation. The expectation was that we would have to wait for years of clinical data to see any real value. The reality is that Eli Lilly and others are looking at the Phase 2A data and seeing a shortcut to a massive market. They want to diversify their portfolios beyond just GLP-1 injectables. This is where online investing gets interesting because you have to decide if the current 13.76 price is a peak or just the beginning of a bidding war. If you are handling your own self-investing, you know that the risk of a deal falling through is always there, but the sheer volume of institutional accumulation suggests a high level of confidence. For those of you who manage your money through interactive brokers or use a SoFi trading platform, the volatility today is a double-edged sword. On one hand, the gain is incredible. On the other, the expectation of a buyout creates a floor that might be higher than the previous lows, but still leaves room for a sharp drop if the news turns out to be premature. Before we go further, I want to hear from you. Comment below how many shares of Ventyx you currently hold, or if you are just watching this one from the sidelines. It's always helpful to see where the community is leaning on these high-volatility biotech plays. Looking back at the recent history, Ventyx has had a rough ride. Just a year or so ago, the stock was trading at much lower levels, and the sentiment was incredibly bearish. Investors were worried about cash burn and the competitive landscape, but the company managed to keep its head down and produce data that actually meant something. They have been very disciplined with their research and development spending, which is rare in this industry. In their most recent reports, they showed a cash runway that extends well into 2026. This financial health gave them the leverage they needed to stay independent until a truly attractive offer came along. This is a great example of why investment help often emphasizes looking at the balance sheet as much as the product pipeline. If you are using Fidelity Investments or checking your SoFi Invest account, you'll notice that Ventyx doesn't have the same name recognition as the big tech giants, but its impact on a portfolio can be just as significant. The company's business model is built on high science, small molecule discovery. They are not trying to be a massive commercial entity yet. They are trying to be the best at finding oral solutions for complex diseases. This makes them a perfect acquisition target. Larger companies have the sales force and the distribution networks, but they often lack the nimble innovation of a specialized lab like Ventyx. This synergy is what drives the current market excitement. Now, let's look at the future outlook, because that's where the real tension lies. There are two main scenarios from here. In the first scenario, the acquisition by Eli Lilly is confirmed within the next few days or weeks. If that happens, we could see the stock price move even higher, perhaps toward $18 or $20 mark, depending on the premium offered. In the second scenario, the talks stall or another bidder fails to emerge, and the stock gives back some of these gains as the market returns to focusing on the long-term clinical trial timelines. This is the reality of biotech investing. It is binary and often unforgiving. However, even if a deal doesn't close immediately, the fact that a giant like Lilly is at the table validates the science. It tells every other investor that Ventyx has something worth owning. The broader macroeconomic environment is also playing a role here. With interest rates potentially stabilizing, there is more appetite for risk among institutional investors. They are moving away from the safety of cash and back into growth-oriented sectors like biotech. This shift is visible across various investing sites and platforms. Whether you are looking at Fidelity mutual funds or individual stock picks on a Robinhood stock trading account, the trend is clear. Capital is seeking out innovative companies that have been unfairly punished over the last year. Ventyx fits that profile perfectly. They were beaten down, they stayed focused, and now they are being rewarded for their clinical progress. When you weigh the expectation that Ventyx would be another zero against the reality of a billion-dollar valuation, it's clear why the market is reacting this way. The company's focus on NLRP3 pathway is particularly smart because it touches on so many different disease states. Inflammation is at the root of almost every major health crisis we face today, from heart disease to neurodegeneration. By developing a pill that can safely manage this, Ventyx is positioning itself at the center of a massive total addressable market. This is not just a speculative bet on a single drug, it is a bet on a platform that could yield multiple successful therapies. As we wrap this up, it's worth reflecting on how quickly things change in the stock market. 24 hours ago, Ventyx was just another small biotech on many watch lists. Today, it's the top mover on the NASDAQ, dominating the conversation in every professional trading circle. The central insight is that in the biotech world, data and partnerships are the only things that truly matter. Expectations were low, but the reality of their scientific achievements has forced a massive reevaluation. For anyone using an online investment platform, from Fidelity Brokers to the Interactive Brokers trading desk, today has been a masterclass in how clinical success translates into market value. To summarize, Ventyx is currently trading at 13.76, up nearly 37% on the back of credible acquisition rumors involving Eli Lilly. This move has shattered the previous expectation of a slow, grueling clinical climb and replaced it with the reality of a potential high-value buyout. The institutional activity and massive volume spikes suggest that this is not just a temporary rally, but a fundamental shift in the company's trajectory. While risks remain, the validation from a major industry leader like Lilly provides a significant margin of safety for the underlying science. We have seen how a clear strategy and solid data can bridge the gap between a struggling small cap and a major acquisition target.
Whether you are using self-investing or prefer the guidance of a professional wealth management team, Ventyx is the story to watch this week. It reminds us that while everyone is distracted by the latest trends in tech, some of the biggest gains are being made in the quiet labs of the biotech sector. This is a professional analysis based on the most current data available, and it shows that staying informed and looking beyond the headlines is the only way to succeed in this market. Disclaimer: this content is for informational and educational purposes only and does not constitute financial, investment, or legal advice. Investing in the stock market, especially in the biotech sector, carries significant risk. Always conduct your own research or consult with a licensed financial advisor before making any investment decisions. If you found this analysis helpful, please remember to like this video, leave a comment with your thoughts on Ventyx, and subscribe to the channel for more deep dives into the latest market movers.